Hi, good morning. You're watching The Market right here on ET Now, and good recovery actually for the markets yesterday. So after some consolidation on Monday and consolidation pretty much for the better part of trade yesterday, we finally managed to spring up from the session lows, and we managed to eke out that 19,600 mark and reclaim that tough resistance mark for the Nifty. Ahead of the weekly expiry, though, metals have been snapping the two-session losing streak. The Nifty small and mid-cap, that's where all the action is, and they managed to gain for a fifth consecutive session. Realty, that declined. The rally in pharma continues, and guess what? FIIs turn buyers. Surprise, surprise.
Yeah, see, it was the 8-day selling trend.
Yeah.
It was eight-day selling pattern. It was never a trend. I think we are going through this patch both locally and globally where the news flow, I think, has been abundant. The news flow has been abundant, and even though the news flow, some would argue, has been mixed with macro concerns making a comeback, the price action both globally and locally, it's not scary. Look at what has been thrown at the markets at a global level. Fitch, high oil prices, high vegetable prices, US inflation making a comeback. Locally, FI turned sellers, barring yesterday. None of the last leg of the numbers, excepting banks, they've been great. In general, concerns centered around vegetable prices, they've been making a comeback. But yet, markets, in a sense, have been in a range with a downward bias. If one really looks at the month of August, which is what you need to look at, and it's a very myopic data, I understand, but let's look at the month of August to establish that data, that what do we have in terms of a pattern here. In the month of August, about 9 trading sessions, about 9 days now, the Bank Nifty is down by 2%, Nifty is down by 0.5%, the small and the mid cap index, I think, are finding their feet, so to speak. So you cannot read too much into the market action. And that is how I think the market action has been range bound, not going anywhere, even though the bias and the news flow has not been very constructive. I guess somewhere the bulls have done a great job of defending the market. I think in this market, rather than chasing the price action, you need to be a buyer on bad days. Every bad day, I think the market still is finding support at lower levels.
And to the point that you were making about the trend, if you look at year-to-date data, FIIs have been massive buyers. It's only month-to-date, and like you said, it's only 9 trading sessions. That's just been the eyesore.
I don't think we can read into... See, for me, the larger trend is that they were sellers in 2022 and they are massive buyers in 2023. 8-9 day, last couple of days, it could be a little bit of skim from the top, maybe some macro adjustment because of what is happening to bond yields. But in terms of the narrative, which was always money moved out of India, went to China, that has reversed completely. The appetite for India, I think, is at a record high. The appetite by foreign institutional investors, I think, is insatiable. So I think the broader trend is that Indian markets will receive flows. Sometimes when markets, they run up, and sometimes when FIs have their own compulsions, you may actually see within the large trend some pause. Yeah. So I think what we've seen in the month of August is a retreat, a pause, but the larger trend is that foreign institutional investors, they still really want to make a comeback. I was looking at some data and me and Patricia were discussing it, and that's how I think the positioning of the market in my book is. What are the macro investors telling you? There is a concern. What are the momentum investors telling you, or telling you there is a bit of a pause? What are the HNI investors doing? They are simply looking for deals in the pre-IPO market or in the SME market. And what are retail guys doing? Well, they're still chasing individual stocks. I think that is how the construct of the market is. Not the strategy for the day. Maybe the graphic is not ready.
Yeah, but it's interesting looking at each of the different categories and what their approach is to the markets, as you were just alluding to. But yeah, you're talking about that range. Just take a look at the last month as well, the month-to-date data for the Nifty Bank, or even the broader markets, and that really reflects the very tight range that the markets have been in. And there you have it, Nikunj. You were talking about how each of the different categories like HNI investors, etc., are looking at the markets right now.
Yeah, we discussed that, and that's how I think we start right now.
Yeah. Okay, so let's talk about cues ahead. And this morning, well, we're waking up to cues of that's looking pretty tempered, at least when it comes to the US markets, and that's largely ahead of the CPI data. But the big cue today is going to be the RBI. And given that the expectation is that it's definitely going to be a pause this time, Nikunj, the question is it really going to move the needle in terms of market sentiment?
Look, the consensus view, let's say 3 months ago, was that global interest rates will peak out and Indian interest rates have peaked out, and there could be a cut which cannot be ruled out if that kind of a trajectory continues. But then, there is a chaos if you look at what is happening to the vegetable prices, whether it is tomato or what is happening to the onion. On top of that, you got grain prices which have started moving higher. Government is taking emergency measures now. The food secretary yesterday announced that they would be releasing more rice and more wheat. There are measures which have been really taken in terms of, for example, ethanol, where food was converted into fuel. So those changes were adopted, and those emergency measures. So you cannot just rule away what is happening in the food and the vegetable space. That is important because that is an important component which will drive the CPI inflation. Reserve Bank of India is particularly careful and cautious about which way the CPI inflation would move. So I would have imagined that if vegetable prices have not moved higher, Reserve Bank of India would have actually made a case for a cut. So I think cut is out. I think there could be a little bit of change in narrative where Reserve Bank of India may start sounding slightly hawkish, and maybe today is the correct policy when you just brought the guard down. You will have to reload the guns, and you'll have to reload the guns to prepare if inflation comes down. Look, the guard on inflation fighting was down, and you were ready to pack them up and take them back in the barrel. I think you'll have to get the guns back and get ready for the war.
Yeah, absolutely. And especially, I think this is the first time that food inflation would have spiked the way it has. And more importantly, one thing we're ignoring, because we've been used to these levels before and seen way worse. Brent is back at 87.
Yeah, so, inflation comes with a lag data.
Yeah.
And you have to prepare yourself for what is actually coming. With this kind of an environment where demand was supposed to be low, global economy was supposed to plummet, the war still continues, but it is not having a very linear impact on the market per se. All those concerns which change the market narrative in April, May, June, some of those concerns are making a comeback. And Reserve Bank of India is very, 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 very sensitive about what will happen to the CPI inflation. And for CPI inflation, the biggest moving part, I think, is fuel and vegetable prices. And unfortunately, ahead of the credit policy, they both are not on the right side. So it's not scary, but like I said, you got to get your guns ready. Inflation soars again.
Yeah. Okay, let's tell you what the market construct is looking like. While we made it back to that 19,600 print, this morning the handover is quiet and a little bit mixed. While the GIFT Nifty is indicating a very flat start for us, the handover from the US equities has not been all that strong. Although yesterday when we were closing in for the day, the US futures were indicating a recovery, but that's not quite the case ahead of the key inflation data tonight. US markets were tentative, so it's almost a 200-point knock that the Dow saw overnight. The S&P 500 index also lost about almost 7/10, and of course, a deeper crack coming in for the Nasdaq, which fell over 1% or so. So did the broader markets. Even though the broader markets there too have managed to outshine what the benchmarks have been doing, that's not quite been the case. Asia this morning, it's a bit of a mixed bag. Flat for Australia, marginally in the green for Japan. Shanghai is actually holding up as well, but marginally so. Korea, Hong Kong, both in the red as we speak, but less than 0.5% or so. But on that note, let's bring on board our chartists. We've got Vaishali Parekh as well as Naresh Mirani joining in to talk about what they feel the market construct is looking like. Morning to both of you. Naresh, let me come to you first. Made it back to 19,600, but can we maintain and hold on to that level?
So I would expect yesterday's recovery was a sharp one in the last, say, 2 hours of the day. But yesterday's low should be an important one, closer to 19,520 on the futures. So that should be a price point to watch out for. And overall, the same thing on the upside, 19,700, 800 remains a resistance. It would be tough to cross those levels in the current situation unless we see some breakouts in the heavyweights like Reliance Industries or a HDFC Bank or an ICICI Bank. And all the heavyweights are continuing to be in a sluggish trend. We are not seeing any, say, breakout moves in the heavyweights. Whatever we are seeing is a little bit of a move more on the smaller weights. So we are stuck in a band and we could remain in a band. At the same time, we hit a new all-time high for the small cap index, the mid cap index yesterday. So outperformance continues in the broader markets. Till the time we don't see a correction over there, we would continue to be in a riding trend. So for now, it's time to be keeping trading stop losses and riding onto the trend in stock specific moves.
Vishali, what is your sense? Good morning first. I mean, are we in for this? Are we in for a prolonged range-bound period for the market now? Because last couple of days that really seems to be the trend.
Very good morning to all of you. Yes, that's what we are witnessing. So somehow Nifty is managing to hold 19,450. So the view remains sideways. And for today also, it's going to be a choppy day, having the weekly expiry plus the RBI announcement. So I would just be patient to see the levels, because only a decisive breach of 19,450 or a 19,800 breach could give us the further confirmation of the trend. So I would say it's a sideways market and hold till its 19,450 is intact.
Let's get those stock-specific strategies going as well. What is it that our chartists are betting on? Naresh, run us through your top picks.
So first is a buy on IndusInd Bank. The stock has given a breakout about 1300, and since then it's gone into a nice uptrend with higher tops and higher bottoms, making a flag formation here, which has a breakout at 1440, 1450. Over the last 3 sessions has shown a lot of relative strength to the banking index. Out here expecting a breakout above the 1450 mark and a quick move towards 1550. Preempting that move, a buy with a stop loss at 1370 and a target price of 1550. Second is a buy on ONGC, which is an interesting long-term chart out here. The stock had last topped out at 180 to 190 when crude hit $130. Since then it corrected all the way down. And around the windfall tax also, the stock was at 155, 160. So it's crossed the first barrier of 155, 160, and the second barrier is at 180. And that also is a 3 to 5 year resistance, with crude again back above $85. New range shift happening on crude. This augurs well for the stock. And we are seeing a similar breakout across oil names around the world as well as locally. So out here expecting that breakout above 180 in the short term. Target price of 200, stop loss at 170.
Let's find out what Vaishali is picking out for the day. And Vaishali, what looks good on the charts?
So I would go for a metal counter, and that is Nalco. So I think yesterday we saw that after a brief consolidation, good volume pickup and good bullish candle formation. So 94 would be my stop loss, and trading target would be 102. Because overall, you see in the metal category, SAIL and Nalco have not really participated to the extent JSW Steel, Jindal Steel and Power, Hind Copper have performed. So I would see that this is a favorable trade right now, a lot of scope for upside. So Nalco would be one of my picks. And the other stock that I would be focusing on is on mobile. Yesterday we saw, in fact, since 2-3 days, we are seeing that a good volume pickup and good bullish candle formations. In fact, 3 consecutive days, we are seeing a good up move coming in. So for the near-term basis, 94 would be the stop loss. And I would be looking at a positional target of 120. So this is one convincing buy, because the stock has really fallen right from the high of 188, and now it's showing signs of reversal. So I would be betting my strategy on this.
Sure. Okay, Nalco and on-mobile, those are the 2 picks coming in from Vaishali. Well, important day today, and the market is going to be keenly looking out for what the RBI MPC committee chooses to decide, what their commentary is, and what they're going to finally conclude. According to a poll conducted by ET Now, 100% of the respondents, both economists as well as bankers, believe that it's going to be a pause this time around, and 80% of them believe that RBI will revise the inflation target. It is important to note that the set expectations are coming at a time when prices of food products, remember, are on the rise. In fact, let me take it across to my colleague Ankur Mishra, who's been tracking and mapping the RBI's commentary pretty closely. He joins in to tell us what to expect.
The best way to understand the expectation is by doing a poll and to ask the market participants what they are feeling, and hence we have done an 18-hour poll on what are the expectations on repo rate hike this time, and 100% respondents has said that this is going to be a pause kind of a policy and there is no expectation on rate hike. The second question which we asked was on stance, which has been much debated, and we got a response on the stance as well, that withdrawal of accommodation may be retained by the MPC this time as well, despite the fact few of the MPC members has already questioned why RBI is keeping that stance. Apart from that, one more pertinent question is about when RBI is going to cut rates. Yes, cut rates. Now, this expectation was far wide if you talk about the last policy, but since we have done poll this time, we have got a response that Q1 of FY25 there is an expectation that RBI may start cutting rates. The other respondents said that by end of FY25 there is a chance that RBI may do so, and 20% responded that they can't comment on this matter. Apart from that, the last question which we asked to the respondents was regarding the projections of inflation. Will there be tinkering this time? And we have got response in favor that RBI is likely to revise inflation target this time. And as far as the broad expectations are concerned, we need to watch that whether or not there is going to be a hawkish stance by Reserve Bank of India, downside risk to CPI, since vegetable and cereal prices have spiked up, and after that the expectation has come that Reserve Bank of India may tinker the CPI trend which has been given in the last policy. Apart from that, the GDP expectations is something which needs to be seen whether or not there is a revision in GDP target. And lastly, there are always announcements outside the policy which includes CBDC, what is the status on digital rupee, and other policy announcements which needs to be watched out this time.
Let's move on then, and stocks to watch in today's trading session. Anisha Jain right here with us in our studios. Anisha, let's begin by discussing Bharat Forge. Came out with its numbers, and Morgan Stanley and JP Morgan giving a thumbs up.
It's a very interesting case of Bharat Forge because the stock hasn't usually till last it didn't used to do much. This year it's run up quite a bit, and this morning while JP Morgan has upgraded the stock, thumbs up coming in from Jefferies, etc. CLS has actually gone ahead and downgraded the counter now. They are saying that the valuations have become very expensive. But quickly to run you through the numbers, the standalone revenue actually jumped up by 21%, much better than what the street was expecting. You also have the EBITDA coming in almost with a gain of around 46% on a year-on-year basis. What JP Morgan is banking on is the fact that the turnaround story seems to be now getting completed, and diversification which they're doing to get away from the cyclicality of the commercial vehicle segment is also something which is auguring well. The industrial revenues this time around have been quite solid. The overall potential that we have been talking about in defense is also playing out well. So all of these factors is something that they like, and that's the reason they have upgraded the target price all the way to 1,115 versus 860 earlier. But of course, as I said, on the other hand, there's CLSA who says that the valuations have run up ahead of the curve. In terms of what the Bloomberg consensus is, well, 70% of the analysts have a buy rating. But interestingly, the target price leaves no upside. It's just 0.2% upside which is left. So very curious case, Nikunj, because people didn't used to believe whenever the company used to deliver as well, it was said to be a one-quarter phenomenon because the earnings have been very choppy. But do you see that turnaround and diversification coming to play now?
See, for me, the plain Bharat Forge is that will it trade above historical averages? For Bharat Forge to trade above historical averages, the cyclical business has to come out. The cyclical business for Bharat Forge is CV, and the cyclical business, if it reduces, then the perceived P multiple what markets would give to Bharat Forge, I think that should increase. So now it really depends on how Bharat Forge is able to reduce the cyclicality in its business. When I say cyclicality, the CV business, which also is globally cyclical, locally cyclical, they are really expanding. And then non-CV business, which is, let's say, what's happening in the defense space, what's happening in the entire capital goods space, that seems to be increasing. The challenge with Bharat Forge is that the template what I've shared with you, this was a template which I think market started believing in 2021, 2022 when the economy started opening up in favor of manufacturing and defense. So it's taken some time for Bharat Forge to really live up to what market expectations are. But the numbers give you a sense that this time maybe they're getting the trajectory and the curve right. So if they get the curve right, I think the stock will continue to trade above historical averages. But I think the progression for Bharat Forge in terms of the price would be a function of how much cyclicality comes out and what could be the P expansion. Based on earnings and valuations, you cannot make a case for re-rating of P multiple. It has to be cyclicality comes down, which will be a 3-4 quarter phenomenon, and market stock has to go above the historical benchmark because the business composition, I think, is changing. That is the play, which is like more like a P change depending on the cyclicality reduction rather than an absolute bet on earnings.
So it's a multiples re-rating kind of case is what you're building up for.
Like Tata Motors has seen a earnings re-rating and a P re-rating, right? Mahindra and Mahindra in 2021 and 22 saw P rating and a earnings re-rating. That I think is the most potent combination. In Bharat Forge's case, looking at the valuation and what they are, and after the recent run-up, it has to be a case of multiple. Multiple will be a function of cyclicality comes down. That I think is work in progress.
Yeah. And the other one is going to be this interesting news bit, Axis Bank upping stake in Max Life and a sizable infusion.
Yeah, that's true, from 13% going to 19%. No, not entirely new because of course it's been talked about along. The only thing was in terms of the valuations because there has been a knack per se that they had got from the IRDA in terms of the valuation. So at least that is now clear that they're infusing around 1612 crores. There's a bit of a divergent view. CLSA believes that it's a very positive development because it shows Axis Bank's commitment for max growth and addresses the wallet share loss concern as well. But on the other hand, Morgan Stanley believes that the implied valuation at which this flow infusion is happening is a little lower than the implied value as per the market capitalization. But nonetheless, I think structurally it should be a good move itself in the sense that the overhang of when it will happen, etc. goes away. And as a sidebar, Max Financial also reported its earnings, right? So in terms of that, it was the steady set that came out. The Q1 VNB margins, or the value of new business margin, has inched higher by 1% year on year. It was the retail protection which is doing well for them. The non-par savings is also inching higher by 58%. So overall, things seems to be getting in shape for Max Financial as well as Axis Bank. But Nikunj, again, I mean, insurance was one space which was not looked at very actively, at least for the last 3 to 4 months, especially after that budget announcements, etc. But now positive sentiments around SBI Life, Max Fin, this overhang going away.
See, one is the deal had to go through, which it has gone through. I think there is still a promoter leverage challenge with Max, and that will continue to give it some kind of a discount. So till the time that promoter leverage issue is not sorted out, the promoter has indicated that look, it is work in progress and they are constructively working on it. I think there would be a discount which it will get in terms of what the industry average is. Second, SBI Life, I think numbers are far better than what Max actually has reported. So there are two impediments for Max in the short term. One, what happens to the promoter leverage, and B, the growth in a franchise like SBI, which is big, which is cheap, is much better and much higher than the industry average. Insurance as a category is making a comeback. But within that, Max, could it outperform or underperform? I think till the time those two issues are not sorted out, which is promoter leverage and the bank camp channel for them has to kick in, I think you may make a case that Max from a market underperformer could become a market performer. For me, I think if I look at the insurance sector, life insurance is what we're talking about. I think LIC is bottom of the barrel, unfortunately. Then you have somewhere Max and other private insurance companies like HDFC Life, and right at the top, based on the valuations and the recent leg of numbers, I think is SBI Life. So the choice for institutional investor becomes SBI Life. Then you would say, okay, the promoter will sell out, it's a cheap stock, Axis will be able to put their shoulder to the wheel, Max could be a turnaround story, bank camp challenge kicks in. So Max still has a little bit of overhang, but I think it's one of those. Okay, let me rephrase it. SBI Life is a comfort trade and Max is a hope trade.
That's a developing story per se, right?
All right, Anisha, thanks so much for joining in. That's Bharat Forge as well as Max Life and Axis that we've discussed. But let's move right on then. In L&T in the spotlight, let's hear it from S.N. Subramanian as he talks about the outlook for the business as well as what is going to be some of the key growth drivers. Listen in.
When you run a conglomerate like this, challenges could be environmental, supply chain, logistics, the unknown diseases like COVID suddenly shutting down everything is a challenge. But I think we have gone through all that, so I think there is a lot of learning, there's a lot of understanding of some of these things, various mechanisms have been evolved, and it's good to see that the people at the company and the The balance sheet has got the strength to manage many of these things. And therefore, I think we are reasonably confident with our size and the various risks and other apparatus which you have within the company that we can manage many of this. These are part of life, and that's what you got to navigate, and that's why you're sitting on the table.
So in terms of guidance for the rest of the year, which sectors or which verticals are you bullish on, and which ones do you think you will double down on?
I think we are given the guidance at the beginning of the year. We continue to stick to that. Essentially, I feel hydrocarbon will do well, heavy civil will do well, water projects continue to do well, and L&T Finance and LTI also does well. And therefore, we are broadly positive and optimistic that we are in good shape, and quite optimistic about the way the economy is growing both in India and in the Middle East.
Back with the market, right here on ET now, the GIFT Nifty indicating a quiet start. We made it to that 19,600 mark, and today you've got the policy, so let's see whether the markets can latch on to that mark or not. Sure enough, while it may be a pause from the MPC this time, the inflation target could be revised upwards. But let's talk stocks, and the NCLT is set to announce its decision regarding the Zee-Sony merger case. It had initially reserved its verdict on the merger. My colleague Ankur is here with more details on the same.
Yes, NCLT is going to pronounce verdict on Zee Entertainment, and this verdict assumes significance because you would remember the Council of Zee Entertainment has said in the court that the merger of Zee with Sony should go through, even if it happens at the cost of without its proposed CEO. Remember, there were proceedings which were underway in Securities Appellate Tribunal separately because the SEBI interim order had barred the promoters of Zee Entertainment, Puneet Goenka to be precise, not to remain a director of the company, and after that the company had formed a committee which is overseeing the day-to-day operations of the company. The final order of SEBI is still under consideration, and that has not been passed yet. In the interim order, there was a bar on Subhash Chandra as well as Puneet Goenka in holding any of the positions in the company, that being a director in any of the listed company, and hence for abiding by the order, a committee was formed. Now, talking about Zee-Sony merger, there were few creditors who had moved NCLT saying that their dues has not been paid, but Zee Entertainment Council has contended that they are not even creditors to the company, and hence the merger should not be stalled. So now we need to wait and see what verdict actually NCLT gives on Zee-Sony merger.
Thanks very much. That's a stock to keep an eye out on in today's trading session. But moving on then, there's also Angel One to be on the radar. And the company has been in the spotlight of late. There's value unlocking prospects after the company has planned to restructure its business. What is the update on that front? We've got Sharad here with the details. Sharad?
Well, yes, this is the second restructuring coming in the broking space after MOSL. Now, looking at it, the company has actually divided the company on the basis of the clients acquired. The first one is being for the authorized persons and the affiliates, which has gone into a new wholly owned subsidiary. And the separate business has been carved out. Actually, this is coming in for the direct acquisition of clients, and of course the company will actually become a holding company. Now both these companies, which are the new companies, are wholly owned subsidiaries, but do remember there is no cash consideration required for this slump sale that company has stated, and also the consideration will be via compulsory convertible preference shares. Now the scheme is subject to NCLT and regulatory approvals, and there will be no change in the shareholding patterns. Now if you look at the entire rationale of this rejig, of course there is an increase in focus control coming into two separate businesses going ahead, and also there will be different offerings coming for the respective client bases. Now let's see how the actually businesses have panned out when it comes to the net worth and their turnover. Looking at it, the AP business which comes from these clients, it's roughly 40% of revenues contributed, while the remaining 59% comes from the direct customer acquisition channels. Recently, of course, company also had come up with its super app, especially on its digital offerings as well, and that is where the value unlocking will be seen as what the street is expecting. And also recently the company will develop and launch various mutual fund schemes as it is on its proposed AMC. So these are the two important points because of this rejig.
Right, okay, we'll leave it at that, Sharad. Let's talk more stocks and a lot of earnings to digest in. We've got Kalyan Jewellers reporting its numbers. They've seen a steady quarter gone by. The revenue has jumped up higher by over 31%. The EBITDA as well has jumped up 22%, and clearly wedding jewelry once again dominated the segmental revenues. So let's chat a little bit more about what's the future going forward. Ramesh Kalyanaraman, the ED at Kalyan Jewellers, joins us on the show right now. Ramesh, hi, morning. Good to have you today on ET Now. Tell us how the demand trends have been in the first quarter and what's it looking like for July and August. Do you see this 30% plus growth sustaining for the rest of the year?
Yeah, so Q1 was very good. Revenue grew by around 34% in India, and on a consolidated, it grew around 31%. Strong momentum, very good footfalls across all the sectors, all the stores. And yes, and July started off very well, very similar to Q1 for the first 2.5 weeks. And then because of this Adhik Mas from July 18, there has been a pause in the wedding demand, especially in the non-South markets. But again, it's not a lost sale. It should come post the Adhik Mas. And again, a few of customers may go to Q3. We might have absorbed something in Q1 as well. But as we speak, weekends are strong and momentum is extremely strong.
So you see this 30% growth level sustaining for the rest of the year, right?
Yeah, so I'll not be able to guide you on a number, but yes, momentum is very strong.
Great. The share of studded jewelry has increased from 29 versus 24% that you clocked last year. Are you seeing higher demand for studded jewelry during the quarters? And, what's the trend that you're picking up here?
Yes, studded. Yes, there is an organic growth for studded jewelry. But the jump which you see from 24 to 29 is majorly because, again, our expansion has been in the non-South of India, where there is the studded demand is much more than in South. So the expansion has been focused in areas where the studded demand is higher than plain gold.
Okay, Ramesh, but let's talk margins because they've been under pressure despite this increase that you've seen in your studded share. So what is the reason for your margin contraction, and do you think it will continue to remain under pressure?
Margin, actually, there is no pressure at all. On the retail front, the margins have only improved year on year. And the margin, the degrowth which you see is majorly because of the franchisee operations. Franchisee comes with a lesser gross margin because there is a share on gross margin with the franchisee partner. But otherwise, on a retail level, on a store level, the margins have no pressure at all.
Fair enough. So 7.4 to 7.5%, you think that's a sustainable margin level you'll maintain?
No, the more franchisee stores come in, the EBITDA margins will keep on degrowing. But on the PBT level, the PAT level, the percentage-wise, it will keep on going up because our franchisee is a FOCO model where the franchisee partner invests on the inventory, and the ROCE of every new showroom, franchisee showroom, is more than 75%. So ROCE also improves, PBT also improves, but there will be a decline in EBITDA margins as well as gross margins.
Okay. What about your same-store sales growth? In India, it stands at about 15%. Does that look sustainable?
So usually we go with a 5 to 7% same-store sales growth, but Q1 has been extremely positive. It is in the range of 15%, but I would always advise people not to target for 15, keep 5 to 7%. That itself is a strong SSG.
All right. What about the tier 2 and 3 cities, rural India, small towns? How has been the performance over there?
The demand has been strong across geographies, I told you, and very strong, very good momentum across India.
Okay. Tell me what the store expansion plan is, both for India as well as Middle East.
So India, as we speak, we announced 52 new showrooms in this financial year. And already we have opened 15 out of it. And in August itself, we are opening 10 more. And it will all be in the non-South markets. And we are trying to open most of the showrooms before Diwali so that we get 2 good quarters. And that's about India. Over and above that, Candier, our online platform, is also going on an expansion spree. We are trying to add physical stores in Candier. We want to end up at least having 30 physical stores by the end of the year. Now, as we speak, we only have 2. Middle East, again, we are trying out our first franchisee store. That will be in Q2, before the end of Q2. And once it settles down, we will guide you on expansion plan for the Middle East.
Sure. Ramesh, good to have you on the show today. Thank you for giving us, some color on the quarter gone by and how the rest of the year is going to pan out.
Thank you very much.
Okay, that's the word coming in from Kalyan Jewellers Management. Pretty confident of what the rest of the year has in store for us and pretty much indicated that the growth momentum is strong. So 30% growth level should not be a problem at all. Pankaj Pandey then joins in on the show to talk about what he's making of the market construct and, of course, what the day ahead is likely to be like. Pankaj, hi, good morning. What's the market expecting from the RBI policy? A status quo and, I guess, a revision in the inflation target upwards?
Yeah, hi, good morning. Thanks for having me. Yes, I think rate hike expectations are not there, so we don't expect RBI to sort of do a rate hike. But I think inflation has been sort of inching upwards and slightly above what RBI would have been anticipating. We have already seen crude rallying to about $87. And then you have pulses prices and some other agri input prices going up. So obviously, inflation outlook could get revised, and it is possible that the RBI might maintain some bit of a hawkish stance. But I think nothing major changes we would expect overall. I think rate cut, again, expectations have been also sort of pushed beyond because we don't expect the US Fed to sort of cut rates because that will sort of put pressure on the currency. So overall, no major changes expected except for some bit of a hawkish stance. But I think interest rate sensitive segments could witness some volatility today, largely because of that. But our overall market outlook remains intact. So our sense is that earnings will continue to grow at 15, 16 odd % the next 2 years, and which is why we are maintaining a Nifty target of 21,500.
Pankaj, hi, morning. Let's get in an outlook as to what your expectation is from Hero MotoCorp, all set to deliver its numbers later today. Do you think that we are likely to see a margins in check this time around due to the higher input costs? And what is the commentary that you think the street would want to hear?
So I think typically two-wheeler as a space we have not been liking so much. I think overall the bookings for the newly launched Harley Davidson product has been sort of better. But I think two-wheeler overall, we are still sort of getting on and off kind of. So we had seen the Hero MotoCorp delivering 5 lakh additional excess volumes. But in some months or recent month, it has again come down. So even the rural recovery is not so even. So which is why we have not been liking this space for quite some time, except for iShare, where I think the volume has been largely intact, largely because of the premiumization. So very muted expectation from Hero MotoCorp, and I don't think we are going to sort of change the stock going forward as well.
Right. Pankaj, I'm wondering how you are absorbing the news of Max Financial. The fact that Axis Bank is looking to up stake an infusion of 1,600 crores thereabouts. The market, of course, was talking about it. So a large part of overhang in that sense is behind us. And then there are VNB margins also, which have expanded to about 22.2. Having said that, is this the most preferred in the insurance sector as a play? Or is it continue to be, an SBI Life or an HDFC Life which find favor?
I think most of your insurance companies have sort of done decent price performance, and at this point in time, we are still not chasing most of them. I think it is better to sort of play banking, which again would have pieces of various businesses, be it AMC or be it life insurance. I think on the life insurance, overall, the growth has been sort of coming better, but I think we are.
Oh, we seem to have snapped that line. Just going to reconnect. But in the meantime, let's get some technical chart checks going as well. And Vaishali, coming on the charts of Maruti Suzuki in trade yesterday, declined Hero Moto as well. It's going to be in the spotlight ahead of its quarterly numbers. What's the view on the charts?
Maruti has been consolidating, but I think the long-term chart, what I'm seeing is still in the positive up move. So I would say that 9,300 should act as a support level. And once we see a new round of momentum setting in, we have a projected target of 10,000 to 10,300. So as long as 9,300 levels are held on, my view stays positive. And the other stock that you asked me to look at is Hero Moto. So yesterday we saw that, yes, Hero Moto gained good strength and it has got renewed a new round of momentum. But let's see, we need to see a follow-up up move coming in. So for a new strategy, I would wait for it to cross 3088 levels for further upside trade.
Big buoyancy in the likes of Aditya Birla Fashions as well as Trent in trade yesterday. Trent, of course, came out with the numbers. Once again, a very steady quarter is what they've reported. Brokerages have upped their targets even further from the current levels on a Trent. And then, yes, Aditya Birla Fashions, which from the word go yesterday was quite the buzzer. On closing, it held out by over 7%, and that stock will just come off for you on your screens. And good 6-month move, or rather 6% move nearabouts, is what Trent also saw in trade yesterday. Naresh, if you had to initiate a fresh long on either ABFRL or a Trent, which one would you pick? And would you go long at these levels on any of these names?
So it would be a tough call given that Trent already made a big move yesterday. So the stock went up from 1700, 1720 to 1790 levels. But on a fade off towards 1750, it would be Trent because that's been in a strong trend. It gave a flag breakout yesterday. So at 1750, the risk reward fits in wherein you keep a stop loss below 1700. Expect a move towards 1850. ABFRL is been a major underperformer. The stock needs to actually cross above the 230 mark for it to become a trend change. So 230 has been the high for the last almost 5-6 months. And on the lower end, 190 has been the bottom. It came very close to that bottom 2 days back as well, post the numbers. So ABFRL would be about 230 on the radar. But for now, Trend seems to be the strongest one. And it has continued in an uptrend all through the last few months and years also.
Okay, that's the take coming in on ABFRL as well as Trent. Quite a few brokerages as well which have come out with their notes. I don't know if we have Pankaj back with us, but Bharat Forge, the numbers, remember, were reported yesterday. Strong execution is what they've seen in the quarter gone by. But I think with Bharat Forge, the story remains of whether or not valuation comfort is there or not. I mean, for instance, CLSA has come out with a note on Bharat Forge and they've actually downgraded the stock to an underperform with the target price of 987. Let's just bring up the stock price for Bharat Forge and show you how it closed in trade yesterday. They're saying that the standalone earnings were significantly above the estimates. Revenues as well beat. They did see a recovery in the European subsidiaries as well, but it's the valuation comfort that is amiss when it comes to Bharat Forge. At 963, the current market price, Pankaj, what's your take on Bharat Forge?
I think when we sort of look at the numbers are obviously good, and we are seeing industrial as well as the defense segment has started to contribute. And along with that, the European subsidiary is also sort of doing well and with a stable outlook. When we sort of look at even the tier 2 names, say something like Ramkrishna Forging, I think the outlook, especially in global market, is turning very positive. And because I think the overall demand there is good, and there is Chinese players have been sort of vacating that market. So our sense is that overall forging as a space looks attractive to us. Valuations are definitely rich, but I think we are yet to sort of figure out in terms of what target prices will give. But we are positive on this stock overall, given the fact that globally things are turning positive. At least that is what the commentary we are picking up.
A solid move on the stock as well yesterday, jumped up about 6.5% on the futures. It scaled up also a 6.7% move. Naresh, do you see more gains on the stock, or do you think it's going to hit some sort of resistance here, Bharat Forge?
So the stock saw move post the numbers yesterday. We saw a guidance increase also happening during the market hours that saw another tick up by end of the day. Technically, the problem is we've seen good volumes yesterday. The risk reward is not great. But if there is a fade off back to that 930 mark, which was the breakout yesterday, that would be an entry point. Technically, volumes were good, price action, but result reactions tend to see some fade off over the next 2 days. So would wait for a dip here, but the breakout is clear. It's broken above the 900, 930 mark, which was the high in November 2022 to February 2023. It had made 4 to 5 attempts around the 900 mark. So technically a clear breakout. Would like to buy closer to 930, stop loss at 900, and should go towards 1050 levels in the short term. That would be the technical view.
Meantime, we're also going to keep an eye out on Z Entertainment. Just wanted to get in your thoughts then, Pankaj, as to what you believe could potentially emerge today as we will be seeing the NCLT decision, and how critical it is for Z.
So I think that is the probably only trigger which can help the stock, because when you sort of look at numbers, it's a washout quarter for them. Ad revenues have been declining. And I think going forward, market share recovery in segments like, say, Marathi or Tamil or even the Hindi flagship channel, I think will hold the key. So the only trigger which is there is the judgment today. And that I think will have a key role to play. Otherwise, from a number perspective, the numbers are not really inspiring. And even though the valuations look attractive, there is outlook for better ad spend by most of the end user industries. It's very difficult to sort of build confidence in this stock at current levels.
Z242. It's been a yes, no, I don't know kind of a start for Z. My limited point is, without getting into news what it means, I have one simple point which I want to bring on the table for discussion here, and that's coming your way, Nuresh. 95% of the Z stock is in free float, and typically when you have 95% of a stock which is in free float, the volatility has been very high. Now that applies for Zomato, that applies for Z. In fact, Zomato still has some lock-in investors, but in case of Z, there are no lock-in investors now.
Absolutely the case, but if you look at it, the institutional holding is really high. So there is a lot of institutional interest. So that is where it becomes different. It is not something which is owned by retail. The public ownership is closer to 20%. So there are a lot of institutional investors which keep going in and out. But technically, the stock has been in this period of speculative moves. Every time there is say NCLT case order, there is some other order, some announcement going on. So in this case, one needs to wait it out, because that whole cycle which was there of re-rating, which happened in 2021, it went from 180, 200, almost 350. Post that, it has been a downtrend. So technically, in the short term, yes, we've made that bottom at 170 to 190. The reversal is in play about 220 levels, but the risk reward is a difficult one here. But if somebody wants to bet on it, one will have to keep a dipper stop loss at 225 levels. And then eventually the target price comes to around 280. So the risk reward does not come up great at 240. You're risking $15 to make 30, 40 rupees on a stock which is very highly volatile. It's a tough one, but at 220, 25, the reversal is done. So we are slowly and steadily setting up for a move towards 280. And also, if you look at the whole media space, it has started recovering. Sun TV is back to 530, 550. We are seeing action even in the smaller names. So Z could be a stock which could slowly go towards 280.
Z could go to 280. Let's say it's a big day for Z in terms of the news flow. Pankaj, import restrictions on laptops and tablets, which means that if you're planning to buy a laptop, buy it before October. And if you haven't bought it right now, please go today. That is what the message from the government is. But markets are also considering this as an opportunity, because the stock price of Keynes, Dixon, Amber, everything has gone up. Is there merit in buying some of the EMS stocks, electronic manufacturing stocks? If yes, which one? If no, why not?
So Nikunj, we don't have a coverage on most of the companies, so which is why I would not be able to sort of comment. But I think this is one interesting development which would have good implications, because I think electronic was considered to be a big category. In fact, the import overall was expected to sort of go beyond even oil. So if you are looking to sort of localize a lot of these products, these players will offer a good opportunity. Now, Dixon has been sort of volatile in terms of their margin trajectory. Earlier expectation was 6%. Now you're sort of clocking 4%. So margin is where we really do not have much of a comfort whether what kind of pricing they can take and what they can pass. and which is where it is still sort of not a very confident segment according to us to sort of look at.
What do you like within the consumption space, Pankaj? I mean, Bata, bad set of numbers. Trend, great set of numbers. Sula, numbers are decent. What is that category which you're excited about when it comes to the niche consumption space?
So Nikunj, I think largely most of the FMCG names, I think are sort of not really looking to, or we would not sort of chase except for say Tata Consumer, which is valued at some closer to 40 times. I think what we are sort of liking or structurally have been liking Trend or Titan. So Trend, for example, delivered 50% plus growth. The last 4 years, they've delivered 35% growth. Industry is growing at 12%. And the Zudio format, they probably have opened around 130 stores this year. Next year, it is going to be even more higher. So I think this is one company which has been sort of, despite the fact that it's quite expensive from a valuation perspective, continues to deliver. And same is the case with Titan. I mean, they've got a market share of 6-7% in a 4.5 lakh crore jewelry market. And with a guidance of, say, 20% growth going forward, that is another expensive stock on the consumption side, and which is why I feel that both these Tata Group companies look very attractive, despite the fact that the valuations are rich.
Okay, fair enough. In the meantime, let's also get in a take as to what the outlook is when it comes to an IRCTC and just some of these other railway stocks, Pankaj. Given that we did start off the year with that runaway rally, do you think that now, just maybe even going by the kind of numbers that the company has reported and the space as a whole, that momentum is fizzing out?
Sort of look at from a top-down perspective, railway, if you look at allocation-wise, used to be some 50,000 odd crore from a budget perspective. That has jumped 5 times in last 5 years to about 2.5 lakh crores. So we have been sort of playing that through some bit of overall bearing as a space, and also from a capital goods perspective, the tier 1 names. So we don't have, or we are not really actively chasing PSU railway stocks from a fundamental perspective as of now. But that's a very interesting space looking going forward with the kind of spending, especially done by the government.
Some breakout shares then on the charts and get in Vaishali's view. JSW Energy, how are you looking at this one as well as an Aditya Birla fashion?
So I would say, yes, JSW Energy has always been a favorite in this category because it has, you're talking about JSW Energy, yes. So yesterday we saw there is a very good rise in volume, good bullish candle formation. So I would wait for a confirmation for a further up move. About 320 would be a breakout level. And from here on, I would look at a target of 350 to 360. So JSW Energy is a buy at these levels with a stop loss of 290. As far as Aditya Birla Fashion is concerned, well, the stock is showing signs of bottoming out, but we need to wait for a follow-up buy, and it has to move past 230, as Nuresh had just mentioned, because technically it is still in the oversold zone, but we need for further confirmation for the trend to pick up.
Okay. Pankaj, why are utilities making a comeback? I mean, these are businesses where I have ESG concerns. These are businesses where you know that ultimately there would be an election cycle which is at play. There are state elections followed by central elections. But the stocks are going up as if there is no tomorrow. What has changed in the last 1 year which warrant this kind of a uptick?
Nikunj, sorry, I missed the sector which you're talking about.
Power sector, especially utilities, power generators.
I think, Nikunj, I think that's a very interesting sector to sort of look at from a 5 to 7 year perspective. I mean, you're talking about, or we have an aspiration of 5 million tons of hydrogen. Now, for every million ton, you require about 25,000 megawatt kind of a power capacity. And you're also sort of talking of exporting power to some of the neighboring countries through undersea cable. So I think this is one space which is clearly looking very attractive, even structurally also. I think companies like, say, NTPC, or even we have been sort of looking at companies like Engineers India are looking attractive. There are a lot more attractive companies coming up. We are definitely exploring this option. But I think this is one space which has been ignored for quite a period of time. And mind you, power demand would grow at 6-7 odd %. But when you sort of top it up with higher EV penetration and plus the prospect of exporting energy in terms of hydrogen, then I think the overall scenario sort of dramatically improves, which is why I think this is one space which can sort of significantly outperform the overall market.
I mean, talking about multi-bagger, and each day when I look at the data, I simply get fascinated. Like we talked about the move in escorts. We spoke about the move, what you, let's say, saw even in something like Astral. But the stock which I want to talk today about is actually Tube Investments. 3-year return, 5-year return, Tube Investments. And even the 10-year return in Tube Investments. Now this year has not been a great year for Tube Investments. But the 5-year return and the 10-year return in Tube Investments, I mean, this is like a blowout number. Look at the surge here, 400% in last 3 years. And talk about a multi-bagger in making. If you stretch it up, Tube Investments 10 years ago was 130. Wow. 130 rupees. It is at 3,000. Pankaj, you know, this is one of the most obvious names. Murugappa Group of Company, great management, great company, great businesses. And 10 years is not like, when you and me went to school. 10 years is like when you and me have started tracking markets. In 10 years, a Murugappa Group of Company has given you a return which is 25 times. What has changed here?
So, Nikunj, we have missed most of the group companies in the Murugappa group overall, but Tube Investment has been making right noises, be it launching, say, electric tractor or electric CV. So, I think they're sort of riding that the new EV wave which has been there. And even when you look at some of their group companies like say Shanti Gears or even Coromandel, which is also sort of foraying into defense, I think this is one group which is seeing a significant sort of a turnaround in fortunes, largely driven by their entry into newer businesses, and which look very promising. We have not been able to capture some of these stocks movement largely because probably we have missed the bigger picture there, but because valuations are also rich and we had seen stocks sort of rallying, but to our surprise, they continue to sort of do well.
Pankaj, thanks so much for joining in and sharing with us your outlook on the markets. Good to have you. Just waiting by for the pre-open rates, almost 9 a.m. on the clock, and let's find out those mid-cap strategies. And Naresh, what's looking good within the broader universe?
So that would be a buy on Ashok Leyland. The stock has given a flag breakout yesterday. The stock finally is into a new all-time high. 5-year high also done. 170 was the top back in 2018, back in 2022. After that breakout around 170, the stock consolidated for a few weeks, then made a move to 185, consolidated again for 2 weeks, and now a fresh breakout done. So seems like a momentum move from here on. Expecting a quick target price of 200, stop loss at 182.
Okay, and Vaishali, what about your ideas?
So I would look at Tech Mahindra because overall IT sector is gradually and consistently moving higher. So Tech Mahindra is one of my picks for today with a stop loss of 1190, and I would be looking at a target of 1270 because even on a weekly chart, if you see, it is just gradually elevating and it is showing signs of a breakout at around 1237. So further strength is gathered above 1240, and I would be bullish on this stock.
Okay, let's also tell you what's happening outside the world of markets. And WeWork warns of a possible bankruptcy in what seems to be a reversal of fortune for the shared workspace provider. In fact, a SoftBank-backed company has been on turmoil ever since its plans to go public back in 2019 imploded after investors recoiled at its hefty losses, corporate governance lapses as well. Also back home, Prime Minister Modi will be in the Lok Sabha today to respond to the no-confidence motion moved by the opposition against the Modi government on July 26th. However, the government in power won't lose vote as BJP and its allies have a majority in the Lok Sabha already. Also, the Parliament has cleared the Digital Data Protection Bill in what will be India's first law on protecting personal data. The bill was approved by a voice vote in Rajya Sabha and proposes a penalty of up to 250 crore rupees for per instance, in fact, of data breach and a maximum of 500 crores for other similar breaches.
Meantime, the monsoons have wreaked havoc in Himachal Pradesh. A cloudburst strike in the state's Sirmur district led to a rise in water levels in the nearby Giri River. There's been damage to life as well as property, which continues to remain a cause of concern. 223 people have lost their lives so far, and numerous houses are damaged. Meantime, the Rajni Mania is back in theatres. His latest release, Jailer, has released today, and fans are thronging the movie halls as always from early this morning itself. Several offices in Chennai and Bengaluru have reportedly declared a holiday due to the release. Meanwhile, Gadar 2 is all set to release tomorrow, and that's expected as well to do well, given the fact that there's been an advance booking in the average ticket sales.